Hello from Otis Markets. This is Ahura with the US inflation data review and market reaction. As always, first we will check the data and then we can see how market reacted and how possibly can react later in next days. Uh, as for October, core inflation and overall inflation or headline inflation, they both met the expectations with 0.2% CPI increase in monthly scale and 0.3% core CPI increase. As for annual scale, both CPI increased from 2.4% to 2.6%, but as it was expected widely, and core CPI also met the expectations and was steady at 3.3%. Market had no surprise, and somehow we met the same numbers that we had, but we shouldn't forget that. But as for example, the core CPI is increasing by 0.3% for the third month in a row. The CPI after after the flat month that 2 months ago we had, it started to increasing again. So for the second month in a row, it's increasing by 0.2%. Then generally, the headline inflation increased from 2.4% to 2.6%. So, which means while the inflation or met the inflation numbers met the expectations and we had no surprise, but at the same time, that is not that it doesn't change the fact of increasing the inflation. I mean, nothing changed. Yes, okay. I mean, nothing changed. Yeah, it's changed how it was expected, but it changed. So the headline inflation increased from 2.4% to 2.6%. And for the third month in a row, the core CPI increased by 0.3%, which means uh, at the first reaction, the market now in the market we have right now, the less chance for not cutting the rate in a December morning before these data published. We had more than 41% chance for not for holding the rate for holding the current rate in December FOMC meeting. But right now, after these data, as it shows that there is a lower inflation. I mean, not lower inflation. There is a controlled inflation in the market, and we can somehow say that the Federal Reserve can control the inflation. They are moving through the plan. So now the market has less chance, about 31.2% chance for not cutting the rate or for holding the current rate in December meeting, and more than 68% for 25 basis rate cuts. I mean, the market has more than 68% chance for 25% rate cut, which means somehow this data says that. So these data shows that somehow it was a little bit more than more dovish. I mean, the Federal Reserve reaction can be more dovish than expected. But still, it's not just about. Also, we should not forget about the bond yields. The 10 years bond yields. Let me bring the yields here. 10 years bond yields in United States fell to 4.38.382%. 4.382% somehow. That was more than 4.4% earlier today and yesterday. But we shouldn't forget that it's already increased from under 4% that we had 2 weeks ago. So generally, the data shows that, yeah, the inflation was in the inflation numbers showed that CPI or the consumer inflation is under control, but generally it's increasing. And we should not forget about the fact that in line with the increasing inflation in United States, we had inflation increasing in Germany, we had inflation increasing in Eurozone, we had increasing inflation in United Kingdom and Canada as well. So generally, the worldwide inflation is a concern right now, and we shouldn't say that. We shouldn't say that, okay, it was in a line, so we shouldn't be worried. So that's why the initial reaction in the market, as if you look at the chart, the initial reaction of your dollar index is losing the steam, but 105.70 or 106 that earlier today, above 106 that earlier today we had, it was already high. So these numbers means that currently, generally, we were waiting for correction after meeting this level. So which means this current correction that we are expecting to see, it doesn't mean because that inflation was in line with expectation. It's because that in recent days, US dollar index increased rapidly and much more than initial expectations. So now the market counting on a correction. So if we see anything lower, any numbers lower than this level, it shouldn't be surprised, because say that okay, the inflation was in line with expectation. It's because of that. No, it's because of generally the correction that we were waiting for US dollar index. So US dollar index, we are expecting to see slightly lower levels than compared from the current level that it has. As for the stock market, S&P 500 at the first reaction was increasing because they are right now more happy than a week ago or 2 days or 3 days ago, because the market 2-3 days ago had more chance for holding the rate. Now they has more chance. The market has gives more chance to cutting the 25 basis point rate cut, which means dovish policies, and it can be in favor of stock markets. But as I told, these numbers these numbers still, they are not changing the fact of increasing inflation and more cautions needed in a market. So the initial reaction could be ignored in today, in last market hours, or tomorrow's, or generally next days. It will be avoided, and we are still waiting for the lower levels for stock markets, because these data doesn't it was not surprised. They had no surprise, but still they didn't change the fact of higher inflation. So this is generally, so if you look at the gold, for example, that we were talking about, the gold, these numbers will put a little bit under pressure the US dollar index, but generally the US dollar index also is expected to have some correction, which means gold can take advantage of that in one hand. In other hand, slightly pressure on the stock market that we are waiting in the next days also can increase the demand for the safe haven. So the gold seems like that it finishes correction, and now we are waiting to see some positive reaction here. As for the stock market, what we're talking about, the stock market reaction to the inflation numbers, we are expecting to see the exactly same reaction as we are expecting for S&P 500 to be seen in Bitcoin chart as well. This is general our view on the market and the data on the market and the market reaction. And if you had any other question, do not hesitate to write in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye-bye.